Welcome to this week's look at the state of the New York City real estate market. This is for the week of March 17th to the 23rd. Lots going on in the New York City real estate market. I'm going to get started in a moment with the luxury market, and we're going to move on, talk about what's happening in Manhattan and Brooklyn. And as always, I'll wrap it up, give you some additional information that will be helpful to you if you are a buyer or seller in this market. And I will also share with you some great strategies and insights so that you can have the best possible outcome. There were 31 contracts signed in the luxury market last week. That is 5 fewer than the previous week. And the number one contract was a sponsored unit on the 116th floor at 217 West 57th Street. It was asking almost $53 million. It was reduced from $64 million when it was listed off of floor plans in 2018. This unit has almost 7,100 square feet. It includes 5 bedrooms, 5.5 bathrooms, a 31 by 50 foot living room with windows on 3 sides that offer spectacular views of Central Park and the city. The primary bedroom suite has a huge bathroom and sitting room and occupies the entire west wing of this apartment. It is in the Central Park Tower, a 1,550 foot tall skyscraper with 179 units. As I mentioned, it started marketing in 2018 as the world's tallest residential building. They offer over 50,000 square feet of amenities, including indoor and outdoor pools, fitness center, children's playroom, a club room on the 100th floor. The club room includes a ballroom, bar, dining facilities, and a cigar lounge. Since January of 2022, 72 units have closed in Central Park Tower, averaging $4,610 per square foot, with an average size of 3,118 square feet. Number 2 contract, 46th floor at 111 West 57th Street, asking just under $24 million, reduced from $24.5 million when it was listed in September. This condo has 4,492 square feet, includes 3 bedrooms and 3.5 bathrooms, a 50 by 21 foot great room with 14-foot ceilings, overlooks Central Park. This is a 60 unit, 82-story building. It rises 1,428 feet. It is on the former site of Steinway & Sons Piano Store. We've talked about this building many times before. Amenities include a concierge, fitness center, 82-foot pool, lounge, terrace, a private dining room, plus a covered driveway entrance. As I said, we have talked about this building before, and this is the 5th time this year that a unit in the building has taken the number 1 or number 2 spot. Total weekly asking price, sales volume, $266,611,000. Average asking price, $8,600,355. Median asking price, $5,995,000. Average discount from original ask to last asking price, 15%. Average days on the market, 972. Now we're going to take a look at what's going on in Manhattan and Brooklyn. As I said, I'll wrap this up at the end, give you some additional information and strategies for how to be successful in this market. Supply was actually down for the week, almost 6% in Manhattan. 509 properties came on the market. Contracts signed were up a little over 9%, 273, and the off-market properties rose 25% over the week at 125. The monthly supply is definitely on the rise, up almost 54% at 2,062. The contract signed 1,084, up 36%, and off-market properties were also up almost 24% at 452. The market pulse remains in a neutral place, down a little bit from last month, up a little bit from last year. And the liquidity pace, wow, we're up over 1,084 to be precise, for contracts signed over the last 30 days. This is up a little over 27% from last month and up a little over 7% from last year. So we're definitely starting to see this spring market really kicking in Manhattan in terms of not only more inventory, but we are also definitely seeing a rise in contract activity. I'll give you more on that at the end of this report. Now we're going to take a look at what is going on in Brooklyn. So unlike Manhattan, supply in Brooklyn was actually up for the week. 237 properties came in the market, almost 6% rise there. Contracts signed approximately 15%, 147 contracts signed. Off-market properties kind of a wash at 60. The supply is now over 1,000 in Brooklyn, 1,002. That is up a little over 40%. Contracts signed 593. That's up almost 17%. Off-market properties 271. That is up almost 38%. The market pulse reading in Brooklyn is down 2% from last month, down 2% from last year. We can see it's still kind of in this neutral place, but it is falling a bit. The liquidity pace chart, 593, up 10% from last month, down almost 2% from last year. So what does all this mean? Well, I'm going to sum it all up for you, give you some additional information, as well as my strategies for success. If you are an active buyer or seller, be sure you stick around for that. And as always, let me know if you have any questions. So as I mentioned, 31 contracts were signed in the luxury market. That is down 5 from the previous week. 4 of those were for the trophy properties priced at $10 million and above. 25 were condos, 4 were co-ops, and 2 were townhouses. 21 of those contracts were for uptown properties and 12 were for downtown. The conditions in Manhattan remain fairly neutral. The supply and the demand are rising in both Manhattan and Brooklyn, with the demand starting to outpace the supply. The supply in Manhattan, 6,440, Brooklyn, 3,094. Pending sales in Manhattan, 2,925, Brooklyn, 1,842. The off-market properties also rise a bit in both Manhattan and Brooklyn, 3,859 in total in Manhattan and 1,880 in Brooklyn. Average days on market in Manhattan, 95, in Brooklyn, 67. The liquidity pace, this 30-day moving window of contracts signed, Manhattan, 1,084. Nice to see that, up over 1,000. And Brooklyn, 593. So I want to share this mortgage rates chart with you. We can see that both the 30-year conforming and non-conforming this week have come down a bit. They're currently 6.59, 6.66. We're seeing the interest rates being affected by some macro conditions, but overall, they're kind of staying about the same. Continue to keep an eye on that, because I know that is important to you if you're buying or selling. So what does this mean for buyers and sellers who are active in this market? So we talk about supply. As I said, the supply is up. However, the demand seems to be rising faster. The Manhattan contract saw the largest weekly number since May of 2023. The Brooklyn demand is also rising, and so Brooklyn buyers may begin to feel a little squeezed if this continues. And this is probably something specifically for buyers. When it comes to leverage, look to days on market for guidance. The longer it's on the market, the more likely you will have leverage. So that being said, sellers, be sure to watch your asking prices. So I want you to take a look at these supply charts for both Manhattan and Brooklyn, showing median days on market of all the active listings. In short, what this is telling us is if you're on the market now or planning to list shortly, do be aware that you will likely have new competition. The new competition makes even barely overpriced properties seem stale. You will know about your asking price in the first 2 to 3 weeks of being on the market. If you're not getting a lot of showings or requests for showings, and certainly if you're not getting offers as a result of those showings, what the buyers are trying to tell you is that they feel you are overpriced for the market based on your competition. So if you want to get your deal done in the spring market, be sure you do keep an eye on your traffic flow, as well as obviously offers and where those offers are coming in, because they will tell you if you are on target. This is important because the longer you're on the market, the less your property is worth. Try to get your deal done if possible. Get your contract signed within, let's say, first 30 to 60 days of being on the market. Okay, that's it for this week's look at the state of the New York City real estate market. As always, my thanks to the Olshan Luxury Report and to Urban Digs. The work they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what is happening in the New York City real estate market. In the meantime, take care.